Good day, everyone. This is Joe Henches with Beyond the Chart, and this is the stock market analysis, the weekend edition. Today is Saturday, May 17th, 2014. All right, we're going to take a look at the market indices, all five of the main ones we look at. Then we'll look at our indicators, look at three key ETFs. We're going to look at Apple, Amazon, and Tesla. And then if I've got time, I may dive into some financials, but we'll have to see how we go here. First of all, right here, let's clear the slide. We've got on the top, we've got the daily of the Dow, S&P 500, and the New York Composite. Then we've got the weekly of each one of those down below. So I've been, my best take on the Dow Industrials is that it looks like we're in this ending diagonal that I call it. And it looks like, 5 waves in here. We had a little bit of a throwover. We pulled back down in here. Now we've had 2 days below the 10. Now we haven't gotten the 10 to cross below the 21 yet. And we need to break down below this line to get a true breakdown out of this diagonal. And of course, once you start to do that, then you need to start going to lower lows and that type of thing. So that's what we're going to be looking for. We had a breakdown of the trend line here on the RSI, corresponding with this move right in here. We're going to, the DI minus is showing, that we're in control here. The DI minus is greater than DI plus. So that's the snapshot on the Dow. When you look at the S&P 500, the picture isn't quite as wedgy as here. And the other thing I've done is I've made a change over here on the New York Composite. I used to have this as a, let me blow this up. I used to have this as a broadening triangle too. I had lines drawn out here and here. And the more I looked at it, I just said, okay, I'm getting the same picture as the Dow. So we're getting an ending diagonal type wedge formation in here. And the New York Composite's real close to looking like it's going to break down too. So now we're starting to get some evidence that these things are in sync. This one I'm still a little, this is almost the prettiest now of the ending diagonal rising wedge in terms of picture perfect type of look. This one's not so much. This one is almost a little too horizontal for me, but when you look at it on the weekly, it's not too bad. It's a tight little wedge. It's pretty clear. But I would rather have this upper line in here to be a little bit more rising in terms of the way I'd like to see a wedge. So we'll just have to wait and see. Now, the interesting thing about this, let's see if the close on this day, on this week, 16.512. That's 2 weeks ago. And this week we closed 16.491. So we've got a reversal action going on here. We went to higher highs during the week. Then we closed below the close of the last 2 weeks. So this could turn out to be kind of a key reversal and gets a move that breaks down out of this. So that's what I'm going to be watching for. I saw that earlier. And let's see. I don't think we're getting it. There's more doji action in here on the weekly on the S&P 500. New York Composite on a weekly basis, not so much of the reversal action. It's not showing up. This closes below this close, I believe. 10.629, 10.603, 10.606. Well, actually, we are getting a close below the low of the closes of the last 2 weeks, even on the New York Composite. It's just not as, it doesn't look as much of a reversal bar as it does on the Dow. So we'll have to watch. We'll see what this next week is going to hold for us. Okay, the next one, I'll take a look at the Russell 2000 and the NASDAQ and see how they're looking. Now, I had this picture with the NASDAQ on the daily. So we got the daily and the Russell daily here, the NASDAQ weekly, the Russell weekly here. So when you look at the daily, again, it's still looking like this head and shoulders type pattern, and it's still looking very symmetrical to this other side over here. So waiting to see if we get breakdown through these trend lines. And now the thing about the Russell 2000 on a daily basis, I'm starting to get less and less enamored with this picture, this broadening or expanding triangle, mainly because of this move, the way this is just stretching out here to the right. Normally, to me, what I would expect, if we're getting a true expanding, broadening top, this move should have, like right about in here, come down pretty hard and come down. I would expect it would have been down here to this trend line right about in here, early to mid-April. And instead, we've kind of strung it out and pushed it out over here. So I'm not quite sure what's going on. I have a feeling this may be morphing into something else. I'm not sure if I can grab that. I know what's going on. It's because it's extended all the way over here to the right. So I'm going to look to change that in the future. I'll mess with that outside of this presentation. So now back on the NASDAQ in the weekly chart. Here is from the bottom in 2009. Okay, so all the way up, you can see that this line, this pullback here in 2011 with that big sell-off, and then what we've done is it broke that trend line, but then it seems to have hugged it. It went above it, kind of went below it. We've been above it for a while. Now we're below it again. Now we broke the trend line in here. That's been since mid to late 2012. That trend line's been broken. So now we've got, you know, like we're seeing on the chart, this is looking a little bit more like a head and shoulders type of formation on the NASDAQ, which is in sync with what we're seeing on the daily chart. Okay, so when you look at the Russell 2000, the Russell 2000 hasn't hit this line yet, but it's getting close. It's pulling back down in here. You know, we break this line, and I think, you know, we're going to get some selling that's coming in because it's going to just, now we could get support down into here. I mean, it doesn't mean we're crashing or anything. It just means that we could, you know, selling is going to intensify. So that's what we're looking at, trying to judge, you know, where the overall trend is on the picture. Okay, let's take a look at our indicators real quick. I want to go back to here because I'm trying to pull out these layouts is what I've got. Okay, so now we've got the high-low right here. Let's take a look at that. Again, we popped up a little bit yesterday, but it's, you know, again, just looking like we're going sideways. We can't seem to just get out of this. We're not getting much of a signal. We haven't really broken down below 0 one day, so that's about it. The VIX, and we had that pop. Now we pulled back, so it's going to be interesting to see, do we get a little bit more pullback and then get a bullish divergence because this doesn't go to a new low, or do we turn here and more selling comes in right away? That's what we'll be watching. And of course, the short-term trading index continues. The blue line continues to be right in the middle. You know, the extreme reading is down below the red, down in here with the blue line, and above the green on the blue line. So not seeing anything there. Let's take a look at our 3 key ETFs. Okay, this is the semiconductor holders ETF. So it looks like a descending triangle that seems to be forming in here. But if you look at, this is a 6-month snapshot. Each one of these are 6 months, and these are daily charts, okay? So you can see the semiconductors over 6 months is slightly up. It's decline, you know, it's not going down yet, although it does look like it may be starting to turn in here. Now look at the home builders over 6 months. Let me get the line. If you say, well, here's right in here is about 6 months ago, we're down over a 6-month period, and we look like we're in a downward trending channel. Now we could be getting some bullish divergence because the indicator didn't go to, RSI didn't go to lower lows. We could be getting something in here. But right now, you'd have to say it looks fairly negative. And we're down below the 233, that little green line. That's the 233-day moving average. This is the 55, that black line. Okay, this is the 55-day, 233-day. This blue-gray line is the 21-day. Okay, so we're down below the 233. I mean, look at the difference between where it is here between the 233. Now, on the Financial Select ETF, okay, we're right at this trend line. And when you look at it over a 6-month period, we're slightly higher, not much, but slightly higher. And it almost looks like we just zigzagged around a line if you draw a line in here. And we're above the 233-day moving average. So what's interesting about this is I'm looking at some financial stocks that clearly are a lot more negative than this, and this isn't showing it. So we'll see whether this trend line is going to hold or not. Okay, now the next thing I want to look at is the 3 stocks that we've been looking at over every Saturday, and that's Apple, Amazon, and Tesla. Okay, so when you look at this over I think these are years worth of data on each chart. So clearly you can see Apple's had a pretty good move over the last year. Now I still am thinking until we'll see if this top gets taken out in here. We'll look at that in a minute. You can see Amazon has had a big rally and it's pulled back, and then basically it's slightly up over the last year at this point. And Tesla is still up decently from where is it, around 120 something a year ago and 191 right now, but it's in a little bit of a downtrend. Let's go ahead and take a look at these. All right, this is Apple had a nice day on Friday. I think it was related to the news of Apple and Google settling their differences, their court disputes and all that good stuff. So I think that's what caused the stock to pop here on Friday. Now we'll see if this takes out this high up in here, and if it does, then I've got to realistically start turning around and say, well, maybe we're going higher. I mean, maybe this is truly in a bull trend. I'm still got my doubts because I think we're in this reaction that I don't think has gone down enough given the entire move of Apple that I looked at. When I look at all the waves and you look at the moves that it's done, I mean, this big move in here, I'm just having a hard time believing that this has corrected this entire move in here. And especially when you see the previous corrections, you look at this correction that occurred, and you can see how sometimes even though you get the sell off, you get a pretty good little bounce and then you roll over. So there are things that I'm seeing in this rally and the overlappingness and things like that that make me still think that this is corrective. But I'm also seeing these gappy, nice big move like in here, and nice impulsive moves in here that start to make me think, well, maybe this whole correction is done. So we'll just have to see whether or not this continues, takes out this high, and how it acts. So let's see. Let me go back. Amazon. This one, Amazon, again, is in a solid downtrend. Again, it hasn't changed a whole lot in the last week. Got a couple of days up and then it pulled right back down. You could be getting a little bit of a small head and shoulders in here, possibly, if this were to rally from here. And you are getting some bullish divergence coming in. If you were to draw a line in here, that this indicator did not go to a lower low with this move. So we'll see, but it needs to show it because right now it's still in a fairly solid downtrend. Okay, let's go back to Tesla. Tesla, I still think, has got a lot more to go. I think we're in an A, B, C move here. Again, correcting everything. When you look at this from when you project, where is C equal to A? You measure out A, you go to the beginning of the end of B, and 100% is right in here, which is right around $140 a share. Well, it's kind of interesting that $140 a share is right in here in this bottom of this wave 4 or close to it. So realistically, I'm thinking it has this kind of move left into it. And the other thing that when you look at on Tesla is, if we take a retracement of this entire move, okay, let's say that this is the 5 waves, and I'll have to adjust that. Okay. All right. Let me adjust the start to make sure I get the exact bottom. There we go. Okay, the numbers are off the chart because of the scale and the way everything's worked out. But this line in here is 61.8% retracement of this entire move. Okay, this line in here is 50% retracement. What's interesting is that this target I just talked about, where C equals wave A, is right at a 50% retracement of the entire move that occurred. So this starts to make me think that 140 is a realistic target if Tesla continues to move to the downside like I expect it to. Okay, that's it on Tesla, Amazon, and Apple. I think that's going to be good for today. I'll dive into the financials as an industry on Tuesday evening. So this has been Joe for Beyond the Chart. Tomorrow we'll go ahead and look at trade ideas. We'll review the ones that we were in this last week and look for new ones for the coming week. Share the post, share the video, and if you haven't subscribed, subscribe. Sign up on the forum either after the blog or right there on the homepage. And it gives you access to the Trade Ideas webpage, and you can download the 5 Essentials PDF also, which is free. So anyway, have a great rest of the weekend, and we'll talk to you tomorrow.